Hi everyone, thank you for joining us today. I am Maria Schumer, Head of Marketing here at the Expatland Global Network. For those of you who are not familiar with us, we are a global network of service providers in expat cities around the world like London. Our team of service providers in each city help expats who are moving from one country to another. We call these teams E-teams, and they provide a range of services from relocations and finding a place to live, to tax and financial planning, and even pet moving for those of us with furry family members. As a network, our focus is on making life easier for expats on the move. Today, you will be hearing from our London E-team, who will be presenting what UK expats need to consider when moving back home to the UK. If you have any questions as our team present, please pop them in the Q&A panel in the Zoom section, and we'll get to them at the end of the webinar. To get us started, we have Phil from Gerson Relocations giving us some tips on what is involved when relocating back to the UK. Over to you, Phil.
Good morning, everybody. Nice to speak to you. Gerson Relocation have been assisting people relocating into the UK and around the globe now for more than 50 years. I've been with them for quite a few years on that. So what I thought we'd do today is just have a look at some of the points that a lot of assignees ask us, some of the points that you need to be aware of as well. And so we'll have a look at the 4 points there, and let's get started and kick off straight away with the transfer of residence. This is probably one of the most important things that people need to be aware of. It's related to those that are coming into the UK from outside of an EU member country. Before you even think of putting anything on an airplane or a boat, you need to go through what is known as the TOR, the transfer of residence, which is an online application with UK's HMR and customs. What that will do, it will enable your shipment to be cleared by ourselves when it arrives here in the UK. You will apply online, detailing what you're looking to ship, the sort of items within that as well. Then once your application has been processed, you will get sent what is known as the URN, or the unique reference number. You then supply that to us and we can clear customs on your behalf. As I said, this is the most important thing. This is outside of anything to do with CORVIDs or anything else. It's the UK customs decided 3 or 4 years ago to get rid of what was then known as the C3 form, put everything online to make it easier to track what's coming into the UK. The URN is, as I said, is the number that they will issue to you. Be aware from online applications, it's normally around about 3 to 4 days for the URN to come to you. We have seen some backlogs just lately where it has taken up to 3 or 4 weeks. So the advice is, as soon as you know you are moving, apply for the URN. If there's any issues with that, then obviously you can speak to us and we can help you with that. You do need to be aware, if you do not apply for the URN and you put your shipment onto the seas and it arrives in the UK without it, you will not be able to clear customs, which will then incur port charges, storage charges. So it is a very expensive way of missing out on that. So once you've done the URN, the other things that you have to be aware of coming into the UK is the quarantine. Maria, can you just flick back for me on that one? Thank you. Quarantine, obviously within the UK at the moment, there is the 14 days quarantine. On the UK government's website, there is the list of countries which are exempt from this, and the list of countries which, if you're coming from or transiting through, you will need to look at that quarantine period. It's 14 days. So once you arrive in the UK, you do need to fill in the online form again through the UK government's website. stating your travel arrangements. You arrive in the UK. Now you can isolate either at a residence that you're going straight to, temporary residence, or a hotel. There are some exceptions for certain people, namely diplomats or or people who are classed as key workers. But again, all this at the moment is open to change very, very quickly, as we've seen over the past few days on that. Once you've done your quarantine, then obviously you can go on to your final residence. Be aware it's advisable to download the tracking app. Within that, the form that you have to download, you will be asked when you arrive whether you've completed it. If you haven't, there is the possibility that there could be fines related to that as well. There are, as I said, exceptions in and around who can or who needs to quarantine. But again, that's all up on the UK's website for you to have a look at as well. So that's the quarantine. Now, when it comes to property in the UK, come on, move forward. There we go. A lot of people, when they're relocated to the UK, first thing they do is jump on the internet, have a look at estate agents and go, I like that property, can you book it for me? Property in London moves very, very fast. What you see on the internet could be gone within 24 hours. It is a very fast-paced property market. We would always recommend that you use the services of a relocation company. Some of the benefits around that is we have relationships with property agents, letting agents, so we sometimes know of things that are coming to the market before they even hit the market. We can also negotiate probably better pricing for those, and we also know the areas as well, so it's worth talking to us about what you're looking for, the sort of areas you want to live in, and the sort of the budgets that you've got on that, and then we can go away, do the research and actually find something for you. Now again, because of COVID within the UK, a lot of the property viewings are being done virtually. So it's still very, very good. They still give you a good overview of the sort of the property. They will even be able to show you sort of the areas around the property, so you can see the neighbourhood that you're looking in on that, and be able to sort of view multiple properties from an itinerary that's built up around your preferences on that. Once all the decisions have been made on the property, then the relocation company, i.e. ourselves, will do all that negotiating for you, setting up the leases, making sure the lease is fit for purpose, and that there's obviously if coming in on an assignment, you need to make sure that you've got those break clauses within leases, just in case the assignment ends early and you're not left sitting with a 3-year lease after 6 months of being in the UK. Physical viewings are starting to come back. They are still very rare, and it's only in very exceptional circumstances will they be looked at on that. The other thing that really relates to housing, and I think I want to sort of spend a little bit of time talking around, is the schooling, because this is the big one that a lot of people talk to us about, especially when there's children involved in a relocation, making sure that they're settled into the sort of the schools. Within the UK, there's the two main forms of schooling. There's the UK state schools, which bring very good education within the London area. One of the key things that you do need to know about when looking at state schools is they are dependent on the property. So the schools have catchment areas. So you may want to live in a certain area and the child go to a certain school. If that school is not within the catchment area, you will not be allowed to send the child there. Again, only in extreme circumstances does that change. With state schools, obviously they're just going back in the past couple of days. They are open. They have been open to key workers for a while now. Applications, there is a backlog. So again, as soon as you know that you're relocating to the UK and there's children involved, start the process if you're looking at state schools to get those applications into that. But again, that should be tied in with the property search as well. The other option within the UK is the private or international schools. Again, quite a few around London. They have a little bit more options and flexibility when it comes to housing. A lot of them will have bus services that you can facilitate with the schools. Certainly the international schools, especially the ones like the ACS and the TASIS, all based around the sort of the Surrey and North London area, they have very good bus services. So it does open up housing search a lot more to you. And the curriculum that they offer is based more on an international assignee type structure. So things to look for is, you know, if you're going to be moving on in 2 or 3 years' time, is to make sure that the curriculum the child is on can be transferred to other international schools. So things like the baccalaureate system, have a chat with them, see what options they've got, what other international curriculums they run with. It makes it easier for the child to relocate on again, so they can just pick up the course further on down the line. The private schools have been open most of the time. There is still a little bit of a backlog on those, but again, they are more open to the admission process on that. But again, it all comes down to as much time and as much pre-planning for these. So those are the sort of the main areas that we look at within the UK, with the big questions that we get asked in and around what happens in the UK. So I hope that's helpful. I'll hand back to Maria and we can have a look at questions later. Thank you.
Thank you, Phil, for that insight. If anyone has any questions for Phil, please put it in the Q&A section and he will answer them at the end of the webinar. Next, we have Charlotte from James Cowper Creston. She is the Global Mobility Tax Manager at their accounting firm, and she will be giving us some points around what to consider from a tax and accounting perspective. Over to you, Charlotte.
Thank you for the introduction. So I'm Charlotte, and just to add a bit more background about me, I started out at KPMG where I trained as Chartered Accountant and Tax Advisor, and I worked in their global mobility practice, first of all up in Scotland and then back down in Reading, working on large global clients. I've now been at James Cooper Preston for a bit over 4 years, and I work as part of our multilingual global mobility tax team, advising on the tax affairs of expats and anyone with anything overseas to consider. So today, I'm going this too fast. Today I'm going to cover the UK tax considerations when you return to the UK from overseas. I'm going to start out with a look at the statutory residence test and our split year rules. Then I'm going to briefly cover temporary non-residence rules and domicile considerations that might be useful for some people, and finish off with some practical planning points. So when you return to the UK, the first consideration from a UK tax perspective will be, when will you become UK resident? That might be from the start of the UK tax year, which is the 6th of April, but it could be from another point during the year if you're using our split year rules. So it's really important to understand exactly when you'll become UK resident so that you can plan appropriately. So residence in the UK is determined on a tax year by tax year basis, and that's according to the statutory residence test. That is quite a complex series of tests, so I can't really go into too much detail, but in summary, it works a bit like a flow chart. You first have to consider 3 automatic non-resident tests. If you meet any of those, you stop there, but if not, you move on and look at 3 automatic resident tests. Again, if you meet any of those, you stop there, but if not, there are further tests that look at your ties to the UK and the number of days you've spent in the UK in a tax year, and that will decide whether you're resident or not. So for people returning to the UK, you're probably looking to meet one of the automatic resident tests. The most well-known of those is the first one, which is spending 183 days in the UK in a tax year. But if you don't meet that, you might well be resident under the UK home test, which broadly is having a UK home for a period of 90 days, 30 of which are in the tax year. And during that period, you either had no overseas home, or if you did, you spent a maximum of 30 days in the overseas home. And the final automatic UK test is working full-time in the UK. That again, it has some complexities to it, and you would need to calculate whether you've worked sufficient hours in the UK. But broadly, if you're working at least 75% of your time in the UK from when you arrive, then you'll probably meet that test. The ties test as well have some complexities and vary depending on whether you've been in the UK in the last 3 tax years or not. So if you've discovered that you are a resident, you can move on to look at the split year cases and see if you can treat the first part of the tax year before your arrival as a period of non-residence, and then the period from your arrival as a resident period. I've divided up the cases into sort of 3 main categories. I think it's on the previous slide. I don't know if I can go back. So those cases are cases 4 and 8, which are starting to have a home in the UK only, or starting to have a home in the UK. And the other one we commonly see is starting full-time work in the UK, which is case 5. And again, all of those have different complexities. For example, case 4, the criteria are that you have to be resident in the UK in the tax year, non-resident in the previous year. You start to have a home in the UK only during the tax year and have that home until the end of the tax year. And you cannot exceed the permitted limits of days and ties in the UK in the overseas part of the tax year. As you can see, it's quite common that people might meet more than one of those cases, in which case it's the earliest split year case that takes priority, so that you become UK resident at the earliest possible opportunity. Now, for a recent example, I recently helped a client who was returning to the UK, having been non-resident in the US for a long period of time. And he wanted to sell his UK property prior to becoming UK resident so that he could pay non-resident capital gains tax under more favourable rebasing rules rather than capital gains tax. So he was going to arrive on the 3rd of July and had planned to sell his property on the 2nd of July. And his concern was if he didn't meet any of the split year cases, his residence would start from the 6th of April and he would fall into being UK resident for the full tax year. In his case, it was a bit more complicated because he didn't think he would ever meet case 5 potentially, because he was going to be working a lot overseas, so not full-time in the UK. And then we looked at case 4, but the issue there was that he couldn't move into his UK home immediately because he had to quarantine due to coronavirus. So he was actually going to be staying in an Airbnb for a few weeks. His concern was that he would have spent too many days and had too many ties in the UK in the overseas part of the year before starting to have a UK home. And so he'd be resident from the 6th of April. As it happened, when we analysed the situation, he didn't actually have too many days or ties, so the planning worked for him. Now moving on to look at temporary non-residence rules that might apply to some people. These are anti-avoidance rules that were put in place to stop taxpayers from creating short periods of non-residence to shelter income or gains that would otherwise be taxable in the UK. People that are caught by that would be any individual who was UK resident in 4 of the 7 tax years prior to departure, and who then returns to the UK and becomes resident again within 5 years. If that's the case, it enables HMRC to tax certain types of income and gains received in the year of non-residence in the tax year in which the person resumes UK residence. Various items are in scope. I've listed them all on the slide, so I won't go into too much detail, but just to pick out a few. chargeable event gains. I know that Sasan is going to cover that in a bit more detail in his presentation. And the other main ones that we see come up are dividends from close companies and capital gains. And just to move on to an example of this, so I recently helped a client who was returning to the UK, and he had sold a UK residential property whilst living overseas and paid non-resident capital gains tax based on a rebase gain. And he was then unexpectedly returning to the UK earlier than he thought. We then had to recalculate the gain on a resident basis, looking at the whole gain, which meant that he had additional tax to pay and only one annual exemption to set against the gain. So it's just something to watch out for if you're in that position. Now I'm briefly going to consider the revival of UK domicile of origin. I know Sasan is going to look at domicile considerations for people without UK domicile of origins who might become deemed domiciled. But this particular aspect will affect anyone who was born in the UK with a UK domicile of origin and who has then acquired a domicile of choice overseas. If you're in that position, then on return to the UK domicile of origin revives and you'll be deemed domicile from your return and taxable on the arising basis, which means you cannot claim the remittance basis of taxation. You'll also be subject to UK inheritance tax on worldwide assets. So again, just something to bear in mind if you fall into that category. And finally, I'm just going to finish off with a few practical planning points. So hopefully from what I've briefly described about residents, you'll see that it's key to understand exactly when you'll become UK residents and look at the split year rules carefully so that you can plan any potential disposals or other chargeable events as favourably as possible. We'd also advise you to check your domicile position and understand the consequences of that. You might want to file a UK tax return in your year of return to the UK to report a split year arrival and also to make sure that you're able to claim all of your tax rate bans and allowances, as if you're taxed under PAYE, you might not be given the full your full allowance. And lastly, we always recommend that you take investment advice in case your return to the UK is going to have any impact on your investments, and I think that's what's coming up next. That's all from me.
Thank you, Charlotte. Some great advice there. I think as people rush home, especially in times with the pandemic, they often overlook tax in the rush to get back home, but there's many consequences, as you've spoken about, if not planned correctly. Next, we have Sasan and Gavin from St. James's Place Wealth Management, who will be giving us an overview of the things to think about from a financial planning perspective. First up, we have Sasan. Over to you, Sasan.
Thank you, Maria. Thank you, Charlotte. So I'm delighted to be here today. I'm joined by Gavin McGhee, Wealth Management Consultant at St. James's Place. Before we get to Gavin, a bit about me. So I started in China in 2012. I was there for 3.5 years with an independent financial advisory firm before joining St. James's Place. I joined St. James's Place in 2016 in Shanghai, and in 2018, I made the move back to London. I picked up a dual license with St. James's Place, and today I run a practice called Frontier Wealth Management. We specialize in the provision of wealth management services for global mobile executives, entrepreneurs, their families, and their companies around repatriation, expatriation, immigration, and emigration, crucially between the UK and the rest of the world. Sorry, next slide. Thank you. Returning to the UK after a period overseas requires careful consideration and planning. Your circumstance can be quite wide-ranging. You may even be a non-UK national entering the UK for the first time, or in the UK on a company assignment. Ensuring that your affairs are in order and that your finances and investments are administered efficiently is of paramount importance. The key to a successful and financially efficient repatriation is professional planning taken as early as possible. So what I'd like to do on that note is talk about two main areas of inquiry I see from clients who return back to the UK. The first is in relation to offshore bonds. So if you come back to the UK with an offshore bond, and what you can do before you come back to the UK, you can actually bed and breakfast the bond. So what does that mean? You can actually encash the bond whilst you're non-UK resident. And because you're non-UK resident, you take the money back to your bank account, you will not pay UK tax because you're not here. Alternatively, if you come back to the UK with the offshore bond, you can benefit from two reliefs. In some cases, it actually makes sense to use these reliefs as opposed to bed and breakfast. Again, advice is crucial. Time and portion relief rules state that your gain when you come back to the UK HMRC will not criticise you for the period you spent offshore, i.e., you will not pay tax on the period you're non-resident. So the gain, say you have gain X, that's multiplied by a fraction. The fraction is the number of days you spent in the UK as resident, and Charlotte's just spoken about that, divided by the total number of days you've actually held that bond, multiplied by your marginal tax rate in the UK, which could be 20, 40 or 45%, which are the thresholds. Top slicing relief could add a further relief on top of that, but that's if you are on a boundary of a marginal tax bracket. The second point is in relation to people that come to the UK brand new. So if you come to the UK brand new, you're probably going to be a non-UK domicile. Crucially as well, if your domicile of origin is not the United Kingdom at that time, you can then carry on and you're probably going to benefit from this. If you spend 15 out of 20 tax years in the UK, you then become deemed domicile for UK tax purposes. That's income tax, capital gains tax, and crucially, inheritance. So that's condition B of the deemed domicile rules. Charlotte's touched on condition A. What you can then do is wrap up some of the assets you've developed offshore into an excluded property trust. And by doing that, you as the settlor of that trust will not pay inheritance tax even after you become deemed domicile. What's important to note here is the investment horizon has now changed. You're in the UK, take advantage of UK solutions and the UK tax system for investment purposes. The UK, as we know or we can guess, is not the cheapest place to live. It's also not the cheapest in terms of taxation. However, there are a number of allowances, there are a number of exemptions we can use to mitigate the taxation and boost your investment portfolio. So please do take advice. What you see on the right-hand side is my repatriation fact sheet that asks a few questions. So please do ask me and I'm happy to share that with you. Next slide, please. Right, just 3 case studies before I hand you over to Gavin. So a client sold a property in China, moved the proceeds to Hong Kong. From Hong Kong, the money was brought into the United Kingdom. The proceeds were then invested in a tax-efficient way with St. James Place. Second case study, which was actually a client I dealt with quite recently, held a St. James Place offshore bond in China and returned back to the UK. Unfortunately, bed and breakfasting did not make sense in this case. However, time and portion relief and top slicing relief did make sense. Consequently, the client encashed the bond. The proceeds were invested onshore with St. James Place in a much more tax-efficient wrapper. And the last point is to do with non-domicile. So when the clients arrived in the UK, they were non-domicile, and crucially, as I said, domicile of origin was not the UK. They spent 15 out of the past 20 tax years in the UK, became deemed domicile for all UK tax purposes. That's income, capital gains, and inheritance. The excluded property trust was a great piece of planning because it meant that they could keep their assets built up offshore outside of the IHT net, even once they've become deemed domicile. So in conclusion, the UK is complex. The advice framework is there. Please do seek specialist advice because then you can decrease your taxation bill, most probably, and grow your assets in the correct way going forwards. Thank you very much, and I'll hand back to Maria.
Thank you, Sasan. We've now got Gavin, who's going to give us some further insights from a financial planning perspective. Gavin, over to you.
Thanks very much, Maria. And yes, good morning or good afternoon or good evening to everyone that's dialing in. my name's Gavin. I work with the St James's Place Wealth Management Group, and the reason why there's a lack of background on me is I'm working on Sasan's ticket today. I'm really here as a support function for him. I currently work within the private client division of St James's Place, and we are geared towards working with clients and their financial advisors like Sasan, where the financial planning requirements are a little bit more complex or a little bit more sophisticated. And if I just move to the next slide. There we go. I think I'm going to jump to about 2 or 3 screens there. Sorry about that. This is just an illustration of the current St James's Place gateway to investment management. And the reason I've shown this first is that clearly diversification is key whenever choosing a home for your investments. And there's often a reticence to working with one individual financial advisor. The quote from Carl Richards. Carl's a close friend of the St James's Place financial advice community. He's a certified financial planner. He's the author of the very successful book, The Behavior Gap. And some of you who read the New York Times will have noticed articles from him. He's often referred to as the sketch guy. And what he's talking about here is that effective, real financial planning is actually helping individuals, couples, and families to adjust their financial strategies as they go through significant changes in their life. For example, relocating to a new country. Hopefully that just gives you a snapshot into the business that stands behind Sasan. Maria, over to you.
Thanks, Gavin, and thanks to Sasan also. We now have Nick from Starwood Animal Transport, who is going to take us through what is involved in moving our pet back to the UK. Over to you, Nick.
Thanks, Maria. So, hi guys. Thanks for joining us this morning or afternoon, evening, wherever you may be dialing in from. As the slide says, it's Nick Fognellis. I own Starwood Animal Transport in the UK. I also sit on the board of directors of IPATA, which is the International Pet and Animal Transport Association, which is effectively our global industry body. As part of that, I also sit on EU committees in Brussels, so I've ended up as the DEFRA liaison for BREXIT for my sins. I've been in this industry for over 10 years now. Prior to that, I had a couple of years in the airline industry, and before that, I had 20 years as an army officer in the British Army. And Gavin, I often ended up as a defender on an outdated map with borders that were out of date and all of the things that go with that. But been in the pet relocation industry now for 10 years, and we're helping people move their pets both in and out of the UK. So we have partners globally that can help you from wherever you are to either come into the UK or indeed from move around expat land, wherever you may be going. So today I just want to go through the rules for bringing pets into the UK, talk about the eligibility of the pet travel scheme, talk about the sort of pet migration preparation, what is needed to bring your pets into the UK, very quick piece on quarantine, talk about commercial and non-commercial arrivals because it's not quite as clear cut as it perhaps would seem. I'll mention very briefly the transfer of residence. I know that Phil mentioned it earlier, but it does also apply to your pets. And then we'll get on to the dreaded subject of Brexit and what impact that's going to have with pets between the UK and Europe. And obviously, as citizens of expat land, if you're going to be based in the UK for any period of time, I would fully expect you to take advantage of our proximity to the European mainland and travel and see it. And clearly, you'll want to take your pets with you. So the pet travel scheme, it only covers dogs, cats and ferrets. Not entirely sure how ferrets got in there, but it's principally for dogs and cats coming in. So there are two ways in. You can either come from a listed country, which is principally a sort of first world country, if you like. And the requirements are for a microchip, preferably an ISO microchip. They are a 15-digit microchip number, and that identifies your pet as having had various treatments or tests at given points along their preparation highway. Then you need a rabies vaccination. Can be done on the same day as the microchip insert, but we need both dates, i.e. when the microchip was inserted and when the rabies vaccination was given. You then have to wait for at least 21 days before you can come into the UK. Point to note there is that not all rabies vaccinations are the same. Some are only valid for a year, some are valid for 3 years. Some of the 3-year validity vaccines only become valid for 3 years if you have a booster within the first 12 months. So it's worth just checking the data sheet, or asking your vet, or indeed asking us, and we'll check it for you. If you're coming from a non-listed country, then the preparation is exactly the same as that. However, you then have to, after the 21 days, you need to do a rabies titer test, i.e. to prove that the rabies vaccination has worked for your pet. So you do a titer test, and then you have 3 months to wait from the date of the test before you can bring your pet into the country. Now, providing you comply with all of the preparation, there is no animal quarantine now in the UK. It ended, or the rules changed on the 1st of January 2012. However, if you don't comply with those guidelines, then you will still need to do quarantine. The length of time varies dependent on, if you've done any preparation, or if you've done none. If you've done some and you're maybe 2 months into that 3-month wait, then it'll just be another month. If you're starting again, then it's 4 months. Other species may require quarantine irrespective of any preparation. So rabbits, for example, have to go into quarantine in the UK on arrival. The difference between commercial and non-commercial is not quite as clear-cut as it perhaps should be. The EU determined that commercial arrival is anything where a pet travels more than 5 days before or after the owner. So irrespective of the coronavirus and the sort of global pandemic where flights are being changed all the time, if you've flown more than 5 days before or after your pet, it is then considered a commercial arrival. Other ways that pets are considered commercial, obviously if you're buying a pet abroad, lots of people are buying puppies at the moment overseas and shipping them into the UK. If you haven't owned a pet for more than 6 months overseas on arrival into the UK, or indeed if you're transferring ownership of that pet, or indeed you've sort of found a rescue overseas, whether it's online or when you've been holidaying, if you bring that pet into the UK before owning it for 6 months, then it will be considered commercial. The point about commercial is that on arrival into the UK, they have to be checked by a DEFRA vet, so a government vet. The non-commercial arrivals, i.e. those that arrive within 5 days of the owner and have been owned for more than 6 months, they come in and they are checked purely by the animal reception centre staff at one of the 5 UK airports where you can fly pets into the UK. And it's important to note that any pet flying into the UK has to arrive into the UK as manifest cargo. So it has to go through the full customs clearance process. There are only 5 airports in the UK that you can fly pets into, and that's Heathrow, Gatwick, Manchester, Glasgow, and Edinburgh. Not all of those 5 airports have commercial facilities, i.e. they don't all have a DEFRA team of vets based at the airport, so they can't all accept commercial arrivals. Manchester is the main one. So just things to think about. There are also additional charges for the DEFRA vets to check the paperwork on arrival. And depending what time of the day and date and day of the week that you arrive, those additional charges can actually add about £400 to the clearance charges. So it's just worth considering. Sorry, just jumped over one there. Transfer of residence, as Phil mentioned earlier, you get a unique reference number. It's for all goods, including pets, that you wish to bring into the UK, or you have to pay the VAT. Now, providing you've owned that pet for more than the 6 months, the VAT on a pet coming in is negligible. It's £45 for a dog or £37 for a cat. So it's negligible, but why pay tax if you don't have to? The link there is a link that will take you straight through to the government, the HMRC website, where you can fill out the application. They then give you the option of either printing and posting the form, believe it or not, in the 21st century, or you can email it. We recommend that you email it straight to that email address there. And ideally, you can CC us in on their response so that we have your TOR, your URN number, so that we can put that in during the customs entry process, and you then won't have to pay VAT. There are a couple of exemptions. Returning goods, if you've exported the pet less than 3 years before, from the UK and have proof of that export, then you're exempt. And temporary admission. Now, as expats, we get the question quite often from expats where you say, look, I'm only coming in on a temporary contract of 2 years. That doesn't count as a temporary admission, unfortunately. Temporary really means a month or two, and you have to have proof of the export that is already booked to receive that exemption. Just jumping around. Sorry. Brexit. So 1st of January 2021, we will be officially out and over the sort of grace period. Currently the EU, and this is all a negotiation strategy clearly, but the current EU strategy is that they're saying that they will no longer recognise the UK's rabies-free status. We've said that we will continue to recognise the EU status, so we're not going to change the rules for pets coming in from the EU. However, they're changing the rules for pets going from the UK to the EU. So that means that we go from effectively listed country status, where we just need a microchip and a rabies vaccination and in you go, to non-listed. So it's the microchip, the rabies vaccination, wait for the month, do the titer test, then wait for a further 3 months before you can travel into the EU. They've also said that they will not recognise UK issued EU pet passports. But even if you've got an EU issued one, you've still got to have done that preparation to go into the EU. Obviously, it's an awful lot of preparation if you're only planning to go to France for a week or whatever. But if you're planning an EU trip, then you need to start the preparation now. And clearly, if you're coming into the UK from a non-listed country, you will have done that preparation anyway. And you'll have all of that, the test, which is valid for a couple of years. In fact, it's valid for as long as you keep the rabies vaccines current. So it's in your interest to keep them up to date. Just to sort of go over a couple of final points, it's worth considering the breed of your pet, because not all airlines will carry all breeds, particularly the snub-nosed or brachycephalic breeds. Not all airlines will carry them, and not all airlines go into all 5 of those border inspections posts that I listed before. So please contact us and we can talk about airlines, options, routes, and how we can help you get in or indeed back out of the UK. And my final point is I just wanted to reiterate or bring your attention to our logos at the bottom. We're the first carbon neutral organisation in our industry. As a member of the board of directors of IPATA, I am championing the cause with the airlines and with my own industry. So I'd obviously urge everybody to just think about the carbon that we produce every day. Happy to take questions at the end, but thanks for your attention.
Thank you, Nick. And thank you to all the team for giving us their insights today and joining us. We do have a couple of questions. The first question is for Charlotte, and the audience wants to know, when considering moving back to the UK, how far in advance would you recommend to get tax advice to understand when you would become a resident?
As I would say, as soon as possible, but obviously the more certain your plans are, the easier it is to advise adequately. But at least if you start talking about it and getting advice earlier, at least you can understand what the potential outcomes are and potential starts of residence.
Excellent, thank you, Charlotte. And the other question is for Nick, and it says, how long does the process take to get the paperwork ready to move a pet back to the UK?
It really depends where you're coming from. Like I say, we have a network of fantastic agents around the world that can help you. At the moment, we are seeing about a 30% surge in animal arrivals into the UK. August is traditionally peak season for us, and the Animal Reception Centre at Heathrow are reporting a 30% increase on peak season numbers. So they've started to allocate slots and try and control those numbers arriving. So at the moment, beyond the sort of blood test wait for 3 months, the only hurdle is actually getting a slot into the Animal Reception Centre at Heathrow. Obviously, Gatwick, Manchester, Glasgow and Edinburgh are a little bit more open, but there are far less flights into those airports at the moment than usual. But please contact us. We can look at your specific requirements and we can advise on timeframes. But if you're coming, we can confirm what is listed and non-listed, and then we can talk you through that timeframe.
Excellent. Thanks, Nick. So thank you to everyone for joining us today. If you would like to connect with one of our presenters, team members, please email us at concierge@expatland.com and we'll connect you, or you can go onto our website, www.expatland.com, fill in the form there, and then we'll provide all the details that you need. Thank you everybody for presenting, and thank you for joining us today.